Hello guys, welcome to the Train Parrot. I am still seeing a flip in the order book, and in today's video I'm gonna show you how, thanks to those orders flipping from selling into now buying, the lows of 117 has still held decently well. Remember that we've been discussing three scenarios, and so far the scenario number one, which is the rejection from a revenge rally, is the one that is still in play. In today's video we're gonna do a catch up on that, try to understand whether that's still the best likely scenario to play out. I'll talk briefly about the status of the formation of the double top that we are currently doing a great job in completing as well in parallel. And there is a legendary buy signal coming in from a reputable indicator that I know many of you are divided, but I think it's worth catching up with that too. Distributions are spiking, but I got a theory, I got a very unique theory that I want to share with you, and I'm sure that you're going to find it interesting. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Thanks so much for all the views yesterday, 4.7k views. I am putting down this video a little bit late because I've been for 24 hours traveling. So I am hoping I can finish the video before the live stream. Yeah, I have a private TA 1 hour session going on every Thursday, every week, and I just made it in time to jump on the live stream and do full TA of all these coins that my Patreon elite members have chosen. If you want to be part of this, join my Patreon as an elite, and you're gonna be offered a link with 5 hearts that you can give to the coins in this list, or you can add your own coins. You still have time. This is at 3 p.m. UK time. Let's go straight into the news. We got in here one bullish news followed by a moderate one and one pretty bearish. Let's start with the bullish one. It says that Square starts rolling out the Bitcoin Lightning payments for merchants, targets full availability by 2026. Direct merchant adoption plus Lightning integration expands BTC's real-world utility and demand for L2 liquidity, a medium-term positive for network usage and narrative. That is great in my opinion. And the moderate one, 6 out of 10, is H100. Group adds 117 Bitcoin, that's around 40 million to its treasury, up to 23% since May, lists on Frankfurt Stock Exchange. Another public company allocating to BTC Titan circulating supply and signals continued corporate treasury adoption beyond MicroStrategy. Impact is modest in size but directionally supportive. And that is great, guys. Seeing this approach being mimicked is magnificent. Remember that what we want is these companies to do it on spot or with 1x leverage. We do not want to mimic fully MicroStrategy, adding up that additional risk that comes with the leverage, because that is a burden for the bear market. If there are liquidation cascades, any company that is holding with leverage is gonna be a pain in the A. And the third news, this one is bearish, is the US spot Bitcoin ETFs post 85 million net outflow on the July 23rd. That's yesterday. Fidelity, 227 million overwhelms BlackRock's IBIT's 143. Let's go and see those numbers. And yet it's the third day, as I mentioned, with the first day in negative. That creates an effect of cascade. They kind of signal, well, we've been having 13 days in a row of inflows and upside. Some of them are taking profits. We can say that the profits are still very modest. Numbers are very small. They are in the red though, and it's the third day in a row. I think this is healthy for as long as it's contained. For example, in this area in here, mid-June, we also have some profit taking, but that didn't stop the parabolic move. So far, the biggest drawdown was located around mid-March. And when it comes to Ethereum, we get the opposite. We are still very sustained in the additions, not as big as 1 week ago, but still very steady coming in on Ethereum. And although I was on the train, I was still updating you on every single chart on my Telegram, Instagram, and Twitter. As you can see in here, people were freaking out. And while I was traveling, I was reading the comments of people saying that everything that we have said is wrong, blah, blah, blah. But if you look at this particular chart in here, or if you go straight into one of my posts on Telegram and you click TTP charts, you can see that you can observe my live charts on demand. Anytime you want, you can get access to the charts, and people are doing so, which I'm sure it's helping to understand where we are. Remember, scenario number 1 is to put a pivot with a rejection from the revenge area, which is the orange line. So we are still in a scenario number 1. Do not judge success by the thumbnail. Go beyond watching the thumbnail. The thumbnail is a narrative. How can we get into there? It's not a forecast. How we get there is described in the actual video. That's why we go for scenarios 1, 2, and 3, and we give flexibility to price to achieve certain targets in different ways. And also remember that I'm in a short. So despite the fact that the thumbnail explains how could we get into 136, I am betting against that. Of course, people do not watch the videos, so they have no clue. They base all the critics just on the thumbnails, which I completely understand. You don't have time to watch the videos. I am a little bit more worried about the people that actually watch the videos and still don't understand. Let me know in the comments if you need additional help. I'm always helping every single person. People are thinking I'm bullying the people that are learning. It's quite the opposite, guys. I love teaching. The thing I don't like is when people are here not for learning, are here for trolling and wasting time themselves, other people, and myself as well. Let's go into the CME chart and let's look at this. What's the current situation? We have a level number 1 that hasn't been hit. We were very close to that. We already took the vast majority of the full gap in here. As you can see, it's a $500 gap and there's just left $130. So although it's still open, it's not as relevant as before and is currently located very close to the price. It's around 119.4 price on Binance Spot. Below the price, we still have this one at 113.572. That is a way more relevant CME gap because it's almost 2K wide. And when it comes to the Bitcoin status, I have done some mild updates just on the 4-hour and daily. At the top, you can see it. On the 4-hour, we have one CME gap below and one above. On the daily, the changes I made is that the RSI, apart from range, top is closer now to the price. The first support was broken, and we are still in the context of only a revenge rally until proven wrong. Second thing that changed on the daily is that we have a buy hash ribbon signals. And that is going to be one of the main focus of my discussion because we've seen inflows, not just small inflows, but the biggest in history coming from potential old miners. And since they were into big stress, now having this buy signal coming directly from their hash rate could mean that things could very quickly shift and in a positive way. Let's go to the 4-hour chart, and as you're gonna notice in here, nothing has changed substantially. We have this breakout in here, and as soon as we reach the order block bearish, we got a rejection that pushed the price back down to do a painful retest. Look at how many weeks to the downside we are forming, and as people are saying in my Telegram and in my community in Patreon, this is starting to look a little bit bullish. There is some sort of bullish absorption in here, and if we focus on the shift I declared in the order book yesterday, we still have it. We still have that 115 support with 1.7K aggregated across Binance Futures OKX in Binance, and we still have the support in here at 117.4. Thanks to that support that we spot in the video yesterday, you can thank that to all these 4 weeks to the downside that absorb that bearish momentum. People were saying, do not look at the order book, there is a lot of manipulation, and I completely agree. But this time, what we spot and what we speculate that could happen in here, that shift actually ended up helping the price to stay around that range. Whether that's gonna hold or not, that's a different story, but it's been 24 hours and the support act like we were expecting it to act. On the 4-hour, the RSI is still just ranging in here. It has managed to put a higher high, but it hasn't yet done a confirmation of a higher low. This area in here could turn into a higher low, but for that, of course, now we need a new higher high. If we come back in here and we take the previous low, then this area in here, we cannot really call it a lower low, and that's why it's still not settled, that conclusion. 4-hour is still a mixed bag because we have all the noisiness that has happened in all that period and not yet have a conclusive directional move. What I mean, that new higher high in here or the breakdown of the support. Let's see where is the support today. It's at around 45.64. It's getting higher, as you can see. Let's look at the price range. So that support currently is 117.865. So basically we are holding the support of the yellow ascending trend line. We are holding the support of the white line. This area in here, my friends, is definitely support so far. And yesterday I was telling my Patreon community, guys, we are testing that strong support in there. There's always some scalpers that have the time to trade that. I do not have the time. Yesterday I was traveling, just holding my phone and rushing to get here and there in London, so I couldn't trade anything, but I'm always gonna let you know if there is any interesting level of support or resistance coming in during the day. The SOPR is still here holding the price. We have broken below. It was looking really bearish to be below this with such a huge rejection, but after that we have a green engulfing candle. This green engulfing candle, it is very bullish on the daily, and these wicks to the downside are also calling for continuation to the upside as long as today we close like this. Remember that the main focus for the longs at the moment is to fully battle discarding this double top formation. And the way we do that is to make sure that we don't have close candles on the daily that break below the neckline. We can come below it, we can visit the support multiple times, which is currently at around 117 on the daily, but we cannot really break that with a daily close. By doing that, we put on the table the next SOPR level of support, which is currently located around 113K. Let's go finally to the daily. This is driving most of my thinking these days. Remember that any changes that I do during the day to the chart, you can access it via Telegram. Consider getting a paid subscription for that or use the free one as you wish. If you pay, of course, that is supporting my team and we're all going to appreciate it. So let's focus on the RSI. The RSI hasn't yet managed to put a lower low. We say that putting that lower low is gonna definitely help settle that continuation to the downside. We had this breakout, we have the revenge test in this area of the orange line. We were very close, probably we reached 69 intra-candle, not 70, which is the actual resistance, and we have formed a pivot. So for the shorts, now the risk is that this candle produces a second revenge rally against the orange line. And for the longs, the biggest risk now is to take the lows and continue with a channel to the downside in this direction. After all, we could move this line, place it like this, and I'm gonna remove the definition of each of the scenarios, and I'm just gonna focus on scenario number 1 and 2. Number 2 is above the orange, and 1 is the one that's still standing as valid scenario, and we're gonna focus on the areas that matter. This intra-candle price action could bring the RSI into resistance, so we care about that, and we also care about this low that we need to take. So I'm gonna use 2 points of interest. That's 66.5, which is calling for a breakout for a second wave of revenge rally against the orange line. And I'm gonna use as well a new level in here, which is to break below the lows of 63. So we got coming in that 66.5, that is the resistance, and our support is going to be the 63.04. Good. Let's go to the price and let's see where all that is. Let's remove this line because it's getting too noisy. We got that support at 118.5k, which we just can see that the price is currently reclaiming. In the morning, we were below that level of support. Now we are back above it. And to break out bullish for that potential new revenge against the orange line, we need to break beyond 120. So resistance 120, support 118.5. In the new revenge rally into the orange line, let's do a little bit of speculation. Let's say we meet with the orange line around here at 73.48, and let's update the orange line. 73.48. That is pushing the target pretty high, guys. It's pushing the price target into $124,200. It is incredible because this looks like a bull flag that is breaking out from the bull flag, and at the same time currently is looking like a double top formation. So we got these two scenarios, and as a trader, the best place you can be is that you get used to the uncertainty. What is the uncertainty here? We can form a double top, okay? Or we can fulfill the target technical of the bull flag. The technical target of the bull flag is from here to there. That gives you roughly 132k. The technical target of the double top, we can also find it like this. Let's use the neckline around the lowest close, let's say 117, give or take. And let's place that from there. That gives you that target of 110. So we got 110 from the technical target of the double top formation that we haven't completed yet, okay? And on the other end, we have the bull flag pushing towards 132 potentially, or the RSI target of 124. That will possibly overlap with part of the bucket number 2 of liquidity. If we go for the 110, well, most likely we take all this liquidity on the shorter term. It has to be shorter term because we just crossed that level, and that was around 2 weeks ago. So in 2 weeks we formed this liquidity, but the top liquidity has been formed since 19th of December. That's why it's longer term, and that's why it's a lot bigger, because we've been around this range. So those 2, 3x's, 10x's have had plenty of time to increase these buckets. So what we need to do is you need to pick a side and trade support or resistance conveniently for you and your own bias, and then look for clues that we're gonna get there, okay? So this analysis on breaking 66 is not the moment to say, oh, at that point I'm gonna enter a long. That is, you are already a long at support, you reach this resistance, you break it, and you decide to hold on to that long, okay? And if you are in a short, you already entering a short from the highs, or you average from around here and around there, and you see weakness and you hold on to your short, unless you have the plan to add more once you reach the very high top of the range on the daily. That's kind of the thinking behind, and I'm hoping that that's starting to sound more like a waka waka. On the weekly, what the price really needs to do is to overlap with all this bearish signal that we have in here. There is a market cipher, bearish divergence in here on this candle. There is a candle with a long wick to the upside. So this green candle needs to engulf the body of the previous one and ideally take the highs of 118 to invalidate the bearishness of that signal on the weekly. Let's focus on what's going on with the leverage squeeze signal in here. I'm not going to focus on the actual signal. I'm going to focus on what's going on with the longs and the shorts. This area, the area where you are at the top of the percentile, produced 3 signals. Once, when we pinch it the first time, we push it further beyond twice, and that gave signal 2 and 3. Since then, the longs have been pulling back down because they were too overextended. Many of them closed their positions, and that's bringing back this ratio back into the lower end. At these areas of the lower end, it's starting to look like there is not enough longs, like there's too many shorts. And I'm seeing some other posts on crypto Twitter coming from accounts that do analysis on the market, showing that there was too many longs in this area, and that produced local tops, and now there is very little number of longs, and that eventually could make it a better opportunity to long the market. So I will say, if the price comes back lower in here, there is a potential for a liquidity sweep. something that looks like this and then continues up. This is not a forecast that the price is going lower. I'm not saying that. I'm saying if the price comes lower to this range, since this is gonna flip and cross this area, potentially that could bring the opportunity of that turning into a liquidity hunt. I do not think that it's likely that we are gonna necessarily go into 114. It's not particularly high likely the scenario that we lose those lows in this occasion. Since the signal of SOPR pinching 3.8K, Ethereum has had already a drawdown of 8%. Profit takers in the green were at that point pinching the first PNR percentile band, and since then it has cooled down a little bit, which in my opinion is good for the longs on Ethereum. Has it cooled down by a lot? Is it a hell of an opportunity to re-enter right now? Not necessarily. An obvious opportunity if we get into this end of the band, but you can see that corrections like this of the SOPR have been great opportunities to continue with the uptrend. And you can see that potentially today we are settling this buy signal on the hash ribbons indicator. So this means that the hash rate has increased significantly, and I will say that these highs in here have contributed to the moving averages to finally produce that bullish cross. The price action has already produced the bullish cross way before, that was around the 30th of June, but the hash rate was still very low, causing this whole period of capitulation starting from the 26th of June. From the 26th of June, during the period of the miners' capitulation, we have huge, vast, all-time high inflows coming from wallets that most likely belonged to very old miners. We're talking about 80 to 120k Bitcoin hit new wallets combined with exchanges, increasing the fears of a potential distribution going on. So now the question is, are they out of the stress? Do they still need to distribute and sell that in the exchange necessarily? Since they increased that hash rate, all we know is that they have bumped those computers to produce necessary hash rate to get out of the area where the indicator says that they are in stress. We can do an educated guess, of course, that most of the time once they hit the buy signal, we are kind of out of trouble, but historically speaking, there's plenty of exceptions where you get the buy signal and you still get some drawdown in the price. It's not like you get the buy signal and you go straight up. It used to be like that, but not anymore. And if we go to the big well explorer that contains the largest holders, you can see how we remain in a massive distribution in this price area in here. And yes, guys, some new things are going on in the network that I want to share with you in combination with that hash rate. So one hypothesis is that they actually were in a huge stress, these miners. They were running out of cash and they had to stop some computers. That obviously impacted the hash rate in a negative way, and then they needed to move some coins to pay bills, to put back those computers at work. So yeah, there is that hypothesis that maybe thanks to that distribution that they potentially have already done now, they're out of the stress. But here's the thing, the signal triggered yesterday, that's the 23rd, and on the 22nd of July, I reported around 6k coins hitting exchanges from large holders. But since then, the total net amount has increased to 33,000, okay? So we got readings of 41, followed by 11, 11, and then again 44, and then 6, then 1k, and then again 30k, and today we have 2k again. And that is not compensating with the current outflows that we can see on the lower end in here, and that is making up for way over 100k hitting exchanges post the buy signal. So there is an hypothesis number 2, which is there is some distribution going on that is beyond the stress of the hash rate. So despite the fact that we have already completed the capitulation, we got our buy signal is potentially settled, the hash rate is up, and we get 33,000 coins hitting exchanges. After that, that leads me into that second hypothesis that they want to distribute because some other reasons. Maybe the price is very high and they just want to take profits, or they are anticipating some correction. Who knows? But it's more than worth to keep an eye on the timing of these events. Large holders, 33,000, post-buy signal. Let me know what you think in the comments. We are in grid at 71 and we continue to have the same liquidity. We can see that in the short term, this looks just like sideways on the 15 minutes. People are saying, you're right, you're wrong, you're right, you're wrong, you're right, you're wrong every 5 minutes in the comments, and price hasn't gone anywhere. The same way they are judging the videos is the same way they are performing with their trades. Buying the top, selling the bottom, that is not the way, guys, you should be. It's too much emotions. To trade, you need to be rational, pragmatic, laid back, and personally, I prefer data-driven decisions. But it's not a must, really. So I continue to think the same. There is some interesting liquidity in the short term in here, but if we want to break down from that double top, there is short-term liquidity to be taken from there. At some point, I still think that we're gonna go into 2 before we end the cycle. That's what I mean. And I continue to stay interested in building up my short position. Not much has changed in the liquidation map. We can see that 115.6 is the largest liquidity pool among all of them. The only thing that changed is that now this is the largest relative to the one that was at around 107. And this supports that idea that thanks to all these longs that have placed their risk around here, we could have that liquidity hunt underneath the double top with further continuation to upside. So watch out for that. Yesterday, we had a couple of candles, 12-hour candles of big liquidations of longs. That's how I got most of the comments in the video yesterday. People get liquidated, they see a thumbnail that says how we could get into 136, explaining how the journey will look like. Then they get liquidated, they lose money, and they look for someone to blame, and they find a video that says 136, and they say, hey, you're always wrong. Wrong on what specifically? I never say yesterday that we are gonna go into 136 overnight. So let's look at how the order book is looking today. You can see on FAR charts we have some very decent support around this area of 116.8. That is $84 million, and the purple whales continue to roll over in here. So they are taking trades, but they are slowing down, as you can see. Initially, that was a big move, larger and larger, but then smaller and smaller and smaller. And now they seem to be in a long, but I don't know if they're really gonna engage full mode from here. Resistance is located at around 125K, and there is 50 million. Right above the price, it shows just 40 million at 120. Let's look at Market Monkey Terminal. We still have very intense levels of support in the order book. The shift is real. We used to have just 2K and that's it. But now everything that we have below the price is really a lot more than above the price. And guys, this is not to say just go mental and take a long. I am never implying that. I'm just observing and using in my benefit whatever I see this in confluence with other elements. This is in no way a video to say, oh, because there is a lot of bidding in here, take a long. There's nothing more manipulative than the order book by itself, period. So in no way we're gonna read it lightly. So yes, I will say that we still have that wall of buying below the price, but the aggressive buyers are stepping in small waves. As you can see on the CBD, they come in, take some long and immediately put new lows, meaning that they are kind of taking steps against taking more aggressive longs in this area of the price. Delta shows a very flat amount of cumulative around this range, so definitely there is no alpha around there. Open interest has magnificently increased thanks to two levels. The level of 120, which I presume it increased because they were taking shorts, but maybe there's a combination. Maybe there's some longs that enter in here and now are in pain as well. But definitely at that level, there was a sharp increase in the open interest, and price tends to come back to revisit areas where there's been high levels of open interest. 118 again is is a level full of new orders being opened constantly around the area, followed by 110, 109 on the low end. The bid versus ask at the moment, the defense is located at around 5% away from the price according to the percentiles, and if we focus on this, you can see that multiple times 0 to 5% was spiking extremely high, defending the price, and that is a consequence of the flip that we discussed yesterday. And thanks to that flip, guys, that's how you build all these wicks to the downside, because 0 to 5%, which is more or less, around the range of the wicks, is where the price has been rescued so far from falling any deeper. Where we do not have necessarily the most amount of support, at least when we consider a ratio, is in deviations of 5 to 10% away from the price, below and above the price. If you compare that as a ratio, now we can see that the top end, the limits to sell, are at the moment taking the advantage. There is more of them on the top end. That, against any other deviation, is the only one that has more defense. So let's go into here and let's see where is that. It says 5 to 10, so if I move 5% away from the price, that puts me at around 124.7, and it says that 5 to 10, there is more selling pressure. So where is that? Well, probably that's coming from the combination of this level right there located at 125, maybe even with the 130. Those are two levels that are meant to be there for shorting the price if we get there, and that compared to what there is in the same deviation but below the price, obviously that one on the top end is winning. The stock market so far today is looking to be in the green, and that could be one thing that could help the price now to continue to the upside, helping the scenario of the bull flag to play out to the upside. For that, we are gonna need this RSI daily move to go into the resistance of 66, break it to increase the chances of an expansion into 73.48. That revenge rally there, that second wave revenge rally into 73, despite the fact that it's not yet reclaiming that level and not even going into the 85, what it means that we don't even need that to actually hit levels that are even closer to 125k, and that can still take number 2 within bearish divergences. So let's wrap it up for today. If general markets continue to be in the positive, which is, I can see, is also pushing the gold down as well, the bulls might step in and defend the argument of the bull flag for a breakout that can lead into prices of 125 and beyond. That is still within the scenario number 1, where we are below the orange line of resistance doing just revenge rallies. So far, the daily needs to really catch up with that. At the moment, it's still pointing down. But if the general markets remain like that and hold like that, that could be all the fuel that we need to achieve that. If we get into those levels, I'm gonna be looking into adding into my short. I might take the long of the liquidity hunt if we come back down in here and retest the past week low. I'll let you know, of course, either way I do on my Patreon shortly after, as usual, on Telegram, Instagram, and Twitter, and in the videos in full detail. Make sure that you are subscribed to the channel, of course. Guys, if you want to trade Bitcoin, altcoins, consider to open a new account on Tubit. This is a non-KYC exchange, and by using my link in the description, you get $50 just by signing up, even before depositing. Once you deposit, depending on the size of the deposit and on your trading volume, you can claim up to 30,000 in bonuses. Thanks so much for watching. Now I need to rush into the live stream that's gonna start in just 20 minutes with my elite members. Thanks so much. I'll see you in the next one. Bye-bye.